Hello, friends. Welcome back to our show, Tax Time with Anil Gandhi. I'm your host, Varish. Last week, we discussed about tax credits and deductions. And this week, we have come up with very interesting topic, HSA, health saving accounts. Our renowned tax expert, Anil Gandhi, will share knowledge on that today. I will brief about Anil Gandhi expertise. Anil Gandhi is the Forbes 2022 Forbes official member with 17 years of experience as a finance controller, CFO, and senior executive positions. He has worked in Amazon, Starbucks, PwC, Sun Edison. His passion is to help community, business owners, independent, increase their revenues and profits. He has also written so many articles, and he has been a guest speaker for many national level events and media channels. So, guys, welcome Anil Gandhi to our show. Welcome, sir. So, close on the heels of the last week topic of standard and itemized deductions, this week we will be discussing with Anil about the other popular deductions and credits which, when applied, does the save money by reducing the amount of taxes on. So let's dive in. Let's start with the basics. What is a tax deduction and a tax credit? Is any difference between them?
Yes, Varish. This is a very common confusing point for many viewers or taxpayers. Deductions, credit. Technically, both are different, but
Okay.
people use it in common when in practical when people talk, they mix up both. But let's talk a bit. Let do a deep dive of these two things. Then we'll go through one. The first one I want to talk about the differences. Yes, they different? Answer is yes. Both are different. The first we'll take it up the deductions. What is a deduction? Deductions will reduce the amount of your income
Mhm.
before you start doing the tax calculation. So once you derive the income, then you calculate how much taxes you need to pay. But these deductions will help you to reduce your taxable income itself. But tax credit, it's completely works in a different way. Tax credit is a dollar to dollar reduction of your tax bill. It means once we have the taxable income, you compute what is your tax liability. From the tax liability, this tax credit will be directly reduced. So tax deductions first, tax credit will end up in the last. So credits that give you a refund, there are few credits which are called refundable tax credit. What does that mean? If there is a tax liability, you reduce your tax liability with these tax credits. But sometimes this refundable tax credit means if there is no tax liability at all for you, then IRS will give you back the money to you. Very rarely we see that there is no tax liability, but IRS will give it back to you because this is a refundable tax credit. So there are some situations like that also. Yeah.
The way you say it, it makes it like very simple, but easy to understand also. But Anil, let's start with the deductions. Apart from the standard and the itemized deductions, what more deductions are available?
Okay. There are many deductions are available for individuals and also for the business owners to claim. But here I want to categorize all those deductions at very high level broadly into work related deductions, education related deductions, health related deductions, and investment related deductions, so that you viewers can get much better clarity on what type of deductions we are talking.
Like as we have a limited time, please mention like about each deduction briefly, so that will help our viewers.
Yes, correct. Sure. First, I will start with work related expenses. What
Okay.
is a work related? If you are working on a W2, you are not eligible to deduct any expenses to generate your W2 income. Like example, if you are using your home office, travel, those expenses are not deductible if you are in W2. But if you are running a business, the
Mhm.
expenses incurred towards generating of your business income, that is tax deductible. An example, you are paying a rent, that is tax deductible for your office. You are paying a rent, that is deductible. You are paying some fees for legal attorneys, that's a legal expenses, to a CPA or an accountant, accounting expenses. If you have a car which you are using to go and meet your clients, vendors, suppliers, those are, then you are using your car for the business purpose, that can be deducted. Or if you are using your home for your business purpose, a part of your home regularly and exclusively and primarily some small part of your home you are using, then you can claim home office deductions also. And apart from this, any other expenses you are incurring which are ordinary and necessary to run your business, those are expenses which can be claimed as a tax deductions. These are work-related deductions, Varish.
Okay. So what about the education? Like what deductions related to the education? So,
Okay.
yeah.
Yes. Now let's jump into the education.
Yeah.
When you talk about the education, there are deductions like student loan interest deduction, eligible educator deductions. Like example, if you are an educator teacher, there may be some expenses you can claim as a deductions, and any work related education expenses. I'll go through one by one. If you have any student loan, that is deductible, but that is subject to your adjusted gross income and also your filing status. Considering the shortage of the time, and we want to talk a lot, I'm not going in deep, but yes, there is a possibility, but that is subject to your income levels. The next one is educator deductible, eligible educator. If you are a teacher, last week we covered this point, but if you're an educator or if you're a teacher, if you're a coach, you can claim up to $250 towards unreimbursed business expenses, which can be used for your classroom materials or supplies, computers, software, or any other education related expenses which you can incur as an educator. And on top of that, any education related to enrich your knowledge. You are running a business, like I am running a tax practice. I might need to spend some money to subscribe few technical stuff, or I might need to attend few trainings. Those expenses also tax deductible as long as they are legitimate, necessary, and ordinary for my business.
So you mentioned like health related deduction also. That's a very important deduction that cannot be missed. So how much can be contributed to HSA?
First, when we talk about health deductions, there are broadly two deductions you can consider. Number one, under Schedule A, last week live show, we spoke about Schedule A itemized deductions. There, you can deduct some medical expenses if you incur for more than 7.5% of your adjusted gross income. That is the first one. The second one is health savings account. If you are contributing to your health savings account, that can be tax deducted, that can be a tax deductible. And health savings account is one of the most powerful tax saving tool IRS is offering. And as long as you are eligible, that means how you become eligible. If you have high deductible health plan, if you have it, high deductible health plan, then you can open HSA. You can contribute to this plan every year. You can contribute. And next week we will have a lot more detailed session on this. But let's get into the details. At a very high level, these are the two categories under healthcare, health related expenses.
Wonderful. So moving on to the investment related deductions, these must be something that are very useful as many filers have investment incomes, properties and funds. So what do you say about that?
Yes, Varish. All of us, whatever money you make, we eat, we need some money for survival. After that, we keep this money in as an investment in somewhere or other, maybe in the stock market, maybe in a real estate, or maybe retirement accounts. So the first one I want to talk about investment is sale of your home. If you are selling your primary home, if you lived there for at least 2 years in the last 5 years, and if you're selling a home up to $500,000, capital gain is completely exempted. It means you might bought a house for $400,000, but you live there for a couple of years, then you want to sell it now. And if you're selling for $700,000, you have a capital gain of $300,000. It's completely tax-free. You don't need to pay taxes. But $500,000 is for the married filing jointly. And if you're a single, it is $250,000. The second one is retirement account, individual retirement arrangement. So IRA, if anyone can contribute up to $6,000 towards IRA, and if your age is more than years, you can contribute $1,000 extra. That is also tax deductible. And the third one is, if you do a lot of investments in the capital in the stock market, and if you lose money, if you have any capital losses, those losses can be adjusted with any other capital gains, or it can be adjusted up to $3,000 with your W-2 income, any ordinary income, or business income. So investment related, these are the high level expenses which are deductible.
Oh, nice. That's too much of the information for our viewers. It's very interesting information. So going with that, like we have one question for the accountants. So do you know who makes the best detectives of the two, Sherlock Holmes or the tax accountant? What do you think?
Varish, you are asking a tax accountant a joke and a tax accountant. We work more to find more directions than Sherlock Holmes. So we always look for how best we can help our clients, and we look for more and more and more and more directions which are legal and ethical. So
yeah, I agree with that. I totally agree with that. Thank you. So let's move on to the tax credits now.
Sure, Varish. I think we covered at very high level about the directions. Now, regarding the tax credit, there are different types of tax credits are available for the individuals and also business owners to claim when they file tax returns. At a very high level, broadly, these credits can be categorized into family and dependent credits, income and saving credits, homeowner credits, healthcare credits, and education credits. And there are a couple of tax credits are very popular, which are dependent tax credit or American Opportunity Tax Credit or lifetime learning credit.
Okay, so let's deal with that one at a time. So please explain us briefly those credits that are mostly commonly used. Also, let's start with the family and dependent credits.
Yes, out of all the credits, the most number one important and the popular one is family and child tax credit, which comes under family and dependent section. So child tax credit, so if you have kids, if they are dependents, and if you are taking care of their 50% of the cost every year, then you can claim them as a dependent and you get a tax credit because for them. For every kid, there is the amount how much money you can claim depends on your adjusted gross income. But kids are not, I know that kids are always taxing us, but we do also get tax credit from them.
Oh, nice. So is there any credit limit, Anil?
Yes, Varish. So for the last year, the tax credit has increased to $3,000 per kid. If the kid is aged between 6 and 17 years, for every kid, you can get a $3,000 credit. Even the kid born on December 31st, he is also eligible for the tax credit. If the age is under 6 years, you can claim up to $3,500 for 6 years old or 6 years less, under 6 years kid. So this is a very big change, which is effective from last year only.
Oh, nice. So it's good to receive advance credit in these challenging times. But does that mean any compliance with additional fees?
Yes, Varish. So last year, even IRS also thought the same, and they started distributing an advance for this credit. They started giving this money from the last year, June onwards. And in the 2 quarters, many of our viewers might receive advance tax credit for the kids. And this month, recently, they might have received letter 6419 from IRS, which is very, very important document. I strongly recommend and request all the viewers to get that letter 6419, which you receive from IRS, and give it to your tax accountant when they file your tax returns, which is very, very important. Don't leave this paper. And yes, if you received any credits already advanced, that will be adjusted now when you file your tax returns.
Okay. So what about the other family credits we have?
Yes. So last year, because of the COVID, government has given some credits. It's called recovery rebate credit. What does that mean? So because of the COVID pandemic situation, IRS has distributed some money in the year 2020 and also some in 2021. And if you received any money last year, and if you are eligible, if your income is less than $150,000, we had a very brief discussion in our previous live show about this. But if your income is less than $150,000, you might have received up to $1,400 last year per person in your family, including your dependents. Every person would have received it. So that credits has to be disclosed on your tax returns when you file your tax returns.
Oh, nice information. So please briefly walk us through the other credits we have.
Yes. The next one I want to talk about is dependent care tax credit. We will also have one more session in the upcoming webinars in upcoming live shows in the near future. But at very high level, if husband and wife, both parents are working, they may need to send their kids to the daycare. And if parents are incurring any dependent care expenses, those expenses against those expenses, they may get some credit for that. So for every child, up to $8,000 of expense, they can claim it as a credit, but only 50% of the tax amount, how much money they spend, to the maximum of $8,000 per kid, they can claim it as a credit. But the maximum a family can claim is only $16,000. That is for 2 and above. Even you have 44 kids or 5 kids, the maximum amount you can spend towards dependent care tax credit is $16,000. On that, 50% is considered as a tax credit, which is a very, very big tax savings. Many tax return filers.
Okay. What about education credits?
Okay. So coming to the education credits, I want to talk about two major credits, which is AOTC, American Opportunity Tax Credit, and Lifetime Learning Credit. So if you paid any college fees for your dependent in the last year, you are eligible to claim American Opportunity Credit. But this is specifically for the undergraduate college students only. And you can claim this up to 4 years, because the college graduation is for 4 years. If any of your dependents are going to the college, if you paid the fee, you are eligible for AOTC. And but it is subject to your income levels also.
Okay. So what expenses are covered under the credit, and is there any limit for that?
Yes, Varish. So there is a maximum of up to $2,500. They can claim it as a credit, and this credit is towards tuition fees, school fees, books and supplies, which are required for their education, for their coursework purpose. But this doesn't include any living expenses or transport expenses.
Okay. Okay. And what about the lifetime learning credit?
Yes. Lifetime learning credit is also a bit very popular one. If you are incurring any expenses towards your undergraduate program or graduation, or maybe vocational students, or if you're spending some money to enrich your skill set, against those expenses, you can get a lifetime learning credit. Again, they are subject to your income levels. But most of the scenarios, they support the low income category people to claim these credits. And you can claim up to the maximum of $2,000 as a credit. That is 20% of your expenses towards these courses. And the maximum you can spend is $10,000. On the $10,000 of expense, you can get up to 20%, which is maximum is $2,000 for this.
Okay. So can AOTC and lifetime learning credit can be claimed at the same time?
Good question, Varish. So because both are education related, can you claim both? Answer is no, but one after one you can claim. So like example, if you're going to undergraduate, maybe 2 years back, you might have claimed for undergraduate classes under American Opportunity Credit. And now you may be going to the graduate college now, or your kid is going to the graduate college now. Then you can claim lifetime learning credit. It's like one after one, but you cannot claim both at the same time.
So are there any other credits you want to know and want to share with us, maybe?
Yes, Varish. The next one I want to talk about is energy related credits. It means if you spend money for any residential energy units, like maybe solar panels, and on your home, if you're installing any solar panels, then you can claim up to 26% of your installation cost. It's considered as an energy credit. And that money you have to incur these expenses, and the solar panels has to be placed up to December 31st. You have this 26% tax credit available.
Okay, that's really interesting information. So claiming that tax deductions and credits might be the most enjoyable part of filing the tax returns, as they reduce the amount of taxes paid, though it is different ways. So thank you very much for this information session, Anil. Thanks for joining us today.
Sure, Varish, and definitely it's always my pleasure to share my knowledge with our viewers. And tax credits and deductions are very important because they will directly help you to reduce your tax liability. So don't miss this and watch again if you want. But it's a very important, a bit maybe technical, but it is very, very important to save your taxes. Thank you very much, Varish, and thanks to Mana TV for this opportunity. Thank you, guys.